Hey everyone, Kristen Gunderson with Gunderson CFO and Bookkeeping. Today I want to talk to y'all about short-term rentals and what are some of the loopholes. So the very first thing is I want you to think of taxes as a game. The key to saving money on taxes is learning the rules. Example, the IRS revenue code. You can either play by the games of taxes as a kindergartner or as a professional level. Most people only know the kindergarten level taxes. You really got to work with a tax advisor, such as myself, in order to understand the professional level of the taxes game. So taxes will be your number one expense in life. So you need to really learn the rules. And that's why if you're following us, every Tuesday I do these live. Well, they're not live, but I upload them to YouTube. And I'm doing these videos so that you can start learning these rules. And if you have any questions or need more help, that's when you can book your discovery call with us. And then understand these fundamentals will put you in the top 1% of taxpayers. Okay. So again, think of taxes as a game. So now I want you to talk about, we're going to cover short-term rentals this week and I'll cover long-term rentals this week. But there's two activity buckets where all of your income is going to flow. So it's either going to flow into the passive bucket, your income's going to flow into passive, or it's going to flow into non-passive bucket of income. So passive activities include all rental activities, regardless of the participation, except as provided under this IRS 469C7. And then any trade or business in which taxpayer does not materially participate. So if you have a business but you're not materially participating in it, it's also passive. All of the other activities are non-passive. So your W-2 job, everything else is non-passive. And passive income from one activity can be offset by passive losses from a separate activity. So what about investment income? Investment income is considered non-passive portfolio income. So all of your income or losses from the following activities generally considered non-passive. So interest and dividends, annuities or royalties, gain or loss on the sale of your capital assets held for investment. So this would be your stocks, your bonds, your options, your futures. So that is all non-passive income. Remember, there's two buckets, passive and non-passive income. So passive activity loss limitations. So you cannot have passive losses can only be offset by passive income. So if you have passive losses, you can only offset them with passive income. So if you have passive income or passive losses and you don't have any passive income, it cannot be offset. Okay. So that's why we want to make sure that our buckets are correct, right? So there are 5 ways to get around this passive activity loss limitation. So 1, we can dispose of passive activity. So offset the gains on your sale with your passive income first. The second way is to earn less than $150,000 and qualify for a $250,000 special loss allowance. The third way is to qualify as a real estate professional status. The fourth way, we have self-rentals. There's a loophole for self-rentals, and that's what I want to talk about more in today. And then there's short-term rental loophole. So what is material participation? So material participation occurs when you're regularly and continuously and have substantial participation in an activity. Okay, so there's 7 tests to determine if you are materially participating in an activity or not. Here's the 3 most common. So the first one is participation in activity continuously, substantially, all of the participation. You can also do participation in the activity for more than 100 hours, and you have to have more than any other individual. So if you're working on a short-term rental or a rental, you have to have more than 100 hours for the year in, and you have to have more than any other individual that's working on this short-term rental for you or this rental property for you. And then the other way is you can participate in the activities for 500 hours during the year. So that's a lot of hours. Like, what is that? 500 divided by 40 hours a week. That's um that's basically full time. That would be 12 and a half weeks that you would be working on this, doing a 40 hours a week. Okay, so substantial is not defined under the IRS code 469. Other areas of tax code use a 70-30% rule. So don't test it though. Take it to mean you're doing everything. Don't take it to mean that you're doing everything. And then you also, the very key thing is you have to book your time when you are working. Say you have this rental property, you want to make sure that instead of it being passive income and then you don't get to deduct any losses with because you don't have any other passive income to deduct it against, you want to make sure it qualifies as passive activity for you, for that you can deduct those losses in the current year. That's what I'm trying to get my point across to. But you have to track your time that you're working on to make sure that you reach the 100 hours of participation, and you have to track everyone else's time who's working on the property. And yes, this is stuff that gets audited with the IRS. Like, this is stuff that they will go and try to audit you for. And if you don't have these records in place, they're going to move that to non-passive income. And then those losses, you don't get to take them that year. You don't get to deduct them against your other income. So what are some, when you're doing for your rental property, what are some hours, what are some things that you can include in your hours for material participation? You could show properties to prospective tenants. That counts. You could clean the unit yourself. You can do improvements on the property yourself. You can collect rent from the tenants, place rental ads. You can directly communicate with the tenants. You can post a listing on rental platforms like Airbnb, VRBO, etc. You can physically walk through property for inspection purposes. When you're going out and buying materials and supplies for the property, if you're performing the repairs and maintenance on the property yourself, make sure you're booking this. And then if you're evicting the tenant, if necessary, you need to be able to track these, keep a log of this, make sure that you're reaching the 100 or the 500 hours, and make sure that you're doing more than anyone else. So if you bring in someone for a complete remodel of like the kitchen, or the roof needs to be done, you need to keep track of how many hours they're spending on it also, for that, especially with the 100 hours and the 100 hours more than anyone else. Like that one, we need to make sure that that is correct, basically, and that we can prove that if you get audited. So what are hours that do not count towards material participation? Hours that do fall into these buckets do not include them. So investor hours. So if you're studying and reviewing financial statements or reports of your rental properties, that does not count. If you're doing education and research hours, that does not count. If you're traveling to the property, that does not count also. And then just I want to reiterate, make sure that you're keeping like an Excel spreadsheet with your time, because you do want to track your material participation, for that we can prove that this is passive income instead of non-passive income, and that if you have losses on these rental properties, that we can actually take it during that year. All right, so that is everything that I have in a nutshell for short-term rental properties. And I know a lot of this may go over your head, and that's okay. Like, um, if you're just getting into this, like that's what I'm here to help you with, to help you understand, make sure that we're following the rules of the IRS to make sure that we can get this stuff, have these losses go against your income, right? That's what I'm here for. That's what I'm here to help you, guide you to. If if this is of interest, or if you're interested in doing short-term rentals or want to get into it, thinking about maybe doing long-term, watch next week's. But if this is something that you're interested in and you're like, yes, I need to find out more information, make sure that I'm doing things correctly by the IRS code at that professional level, not the kindergarten level, please reach out to us and get your discovery call booked. You'll meet with one of our employees who does the discovery calls to make sure that you're a good fit, and then we can move on to a comprehensive consultation for you. And that's when we talk for a good hour, and I get a picture of everything that's going on in your business and in your life. And then I give you an action item list, and then I paint a picture of where you're going to be in a year from now, and I help you make sure that you actually get there. That's what that comprehensive consultation is about. All right. Thank you so much.